You're borrowing all this money with effectively a personal guarantee, a lien over your real estate. And as a result, if something goes wrong with the business, you are still left with the loan. And for me, that's way too high a risk.
Jonathan, what is that number one secret to buying a
Sure.
business using other people's money?
So everyone thinks that when you buy a business, you go to the bank, you find out how much money you can borrow, you give your house, the property that you live in as security, and then you go and give all that money to the owner of the business. They hand you the keys, wish you luck, and that's how a business purchase is done. Well, it can be done that way, but I think it's a terrible way of buying a business because there's just so much risk. You're borrowing all this money with effectively a personal guarantee, a lien over your real estate. And as a result, if something goes wrong with the business, you are still left with the loan. And for me, that's way too high a risk. So what I always say to people is when you're starting out, when you're new to the world of business buying, you need to de-risk the acquisition. And the way we de-risk it is to partially not use our own money, to get our corporate structure right. That's going to be different around the world in different countries. But the key thing is we don't want to spend our life savings. We don't want to borrow using our property, our real estate as security. And that means that you've got a far lower risk transaction. So what we do is we look at different ways of financing the acquisition, depending upon the type of business it is, whether it sells to businesses, whether it sells to consumers. And interestingly, larger businesses are easier to finance than smaller businesses. Now, why do I say that's interesting? I say it's interesting because usually when people think about buying their first business, they go quite small. They go for a business that has annual revenues of a few $100,000. It's kind of in their comfort zone. They can get their head around that number because it's the same value as their real estate. So I always say go bigger. Go for the businesses that have annual revenues of millions of dollars because those are far easier businesses to finance. And we can finance using asset finance if the business has fixed assets, so plant, equipment, machinery. We can use invoice finance. Sometimes we can use cash flow finance, and we can combine this with vendor finance where we pay the owner of the business over a period of time. And when we put these pieces together, a little bit like a jigsaw, we start to see the big picture, and the big picture says you've got 100% financing to buy this business. Now, can we do this with absolutely every single business that we come across? No, we can't. We have to pick and choose. But if you want to buy a business without using any of your own money and use other people's money, then you have to look a little bit harder. But there are plenty of deals out there. And I've got people all around the world buying businesses in this way.